Hey everyone, welcome to the 58th episode of Gyani Sharmaji and the second podcast of Gyani Sharmaji Academy. I'm Akash, and today I have with me Babu and Gagan. They're going to dive deep into India's latest budget announcement, and trust me, there's a lot to unpack here.
Gagan, absolutely, Robin. This budget has some serious implications for investors, taxpayers, and really anyone who follows the Indian economy. We've got massive infrastructure spending, some controversial tax changes, and a few surprises that caught the market off guard.
Yeah, and speaking of surprises, the market reaction was pretty dramatic, wasn't it? But let's start from the top. Big headline number everyone's talking about is the capital expenditure allocation.
Gagan, right? So the government has allocated 8.2 lakh crore for capital expenditure. That's an absolutely massive number. Talking infrastructure, manufacturing, renewable energy, whole works.
And it's not just about throwing money around. There's a clear strategic direction here. They're focusing on fiber self-sufficiency, expanding the semiconductor mission, basically trying to make India less dependent on imports and more self-reliant in critical tech sectors.
Gagan, exactly. What I find interesting is they're doing all this while trying to maintain fiscal discipline. The target is a fiscal deficit of 4.3% of GDP. So they're walking this tightrope between growth and not overspending.
It's like tuning a guitar, right? You want it tight enough to sound good, but not so tight that the string snaps. They're trying to find that sweet spot.
Gagan. Now, let's talk about what really shook the markets. Securities transaction tax hike. This one came out of nowhere for a lot of people.
Yeah, the STT on futures jumped to 0.05% and on options 0.15%. That's not a small tweak. These rates have nearly doubled in some cases.
Gagan. Market? Well, it didn't take it well. Sensex dropped over 1,400 points intraday. Nifty 50 fell more than 530 points. That's a 2% plus drop. You could feel the panic in the air.
Especially among derivatives traders. If you're doing high frequency trading, these costs really start to add up. But here's the thing. The government isn't doing this randomly. They're clearly targeting speculative trading, trying to create a more stable, less volatile market.
Gagan. Right, and they're probably looking to boost revenue too. But for long-term investors, this is really just a bump in the road. If you're investing based on fundamentals, infrastructure growth, renewable energy expansion, this shouldn't change your strategy much.
Exactly. Short-term noise versus long-term signal. The fundamentals are still strong.
Gagan. Okay, so let's talk about something that affects pretty much everyone listening. Personal taxation. Here's the good news. No changes to personal income tax slabs or rates.
Yes, if you're a salaried individual, your tax planning doesn't need a complete overhaul. No nasty surprises when you look at your next paycheck.
Gagan. There are some nice little tweaks that make life easier. The ITR deadline has been moved to March 31st, so a bit less last-minute panic.
And there's a new exemption for interest from accident claim tribunals. These might sound like small things, but they really do add up and make compliance easier.
Gagan, now here's the big one that everyone needs to pay attention to. Completely new Income Tax Act coming into force on April the 1st, 2026.
This is huge. We're talking about replacing the entire tax law. For investors and financial planners, this is the time to start getting your affairs in order. The rules of the game could feel totally different in a couple of years.
Gagan, absolutely. Don't wait until 2026 to start planning. Start now, understand what's coming, position yourself accordingly.
So, Gagan, what should investors actually do with all this information? How should they adjust their strategies?
Gagan, great question. For traders, especially in derivatives, to factor in these higher costs, high-frequency strategies might need a rethink. For long-term investors, and this is important, stay disciplined.
The sector's getting government backing. Infrastructure, renewable energy, semiconductors, these are where the opportunities are. When the government puts 12.2 lakh crore behind something, you want to pay attention.
Gagan, don't forget the global picture. We're not in a bubble. Watch oil prices, what's happening in U.S., China markets, trade policies in the EU and Middle East. Any wobble out there can send ripples into India.
Diversification is key. Don't put all your eggs in one basket, one sector, or one market. Build in contingencies.
Vegan. Honestly, boring advice is often the best advice. Consistency wins. Show up, stick around, especially when everyone else is panicking.
All right, so let's wrap this up. Budget is ambitious. Big infrastructure push, fiscal discipline, some market-shaping tax changes, but the fundamentals, they're pointing in the right direction.
Vegan, exactly. Don't let short-term volatility distract you from long-term opportunities. Stay informed, stay disciplined, and adapt as needed. There's a lot more to explore as this all plays out.
We'll definitely be keeping an eye on this and breaking down whatever comes next. Thanks for tuning in, everyone.
Gyani. If you made it this far, you must really love your markets. See you in the next episode. Take care.